Hello there, very good afternoon, late evening to most of the traders out there. My name is Kenny Simon here with Bretton Financial Trading Academy. Now, we've got something on alert at the moment on gold because there's been a lot of questions from traders asking about the position of gold. They've noticed that the market is really slow, which is true because we've got major countries like the US, Canada, China, as well as various other countries are on holiday. We've got President's Day in the US. So that has actually contributed to a slow moving market. Now, if we're looking into gold, I've got gold on BKFX live trading platform on the MT4, and we're looking into the 4-hour chart. And I've also laid out some resistance zones right here because quite a number of traders are actually on the buy, picking up on the trend and the momentum as of last week, and they've thought it to be a good idea to sort of ride along that uptrend, but then realize that the opening market as of today, the 15th of February 2021, is giving us a bit of a hint. As of a couple of days ago, market closed as well with a last week on Friday with a sort of a pin bar type candlestick right there. So what I've done is laid out some significant resistance zone for gold versus the US dollar. This is on the 4-hour chart as mentioned, and I've drawn a couple of lines as you guys can see right here. I'll just get rid of all these trend line first and just giving you a clearer picture of some resistance zone. As you guys can see, the prices have now traded at the 1818 area here, and we are not looking at further upside move at this moment of time because as we can see, we have got the possibility of prices moving upwards only after it had or it has pierced through some resistant area right here, and then we can see a sort of a clearer way to the upside. But again, as we see the prices now for gold, it's just way below the 3 EMAs as well. And we're going to take a look at the 1-hour chart as well, the daily chart, and to compare it with the 4-hour chart. But the 4-hour chart at this moment of time is giving us some clear indication that it's favoring the downside much more than the upside. We have got possible ABCD pattern as well on the downside. We've got bigger A, B here, C, and then D all the way downwards as well. Now we've got a bit of a zone for buyers as well as traders who want to actually buy the market for XAU versus the dollar, but that actually holds at this area here at 1828 or 1829, if you can say that, right up to 1838 area. Now that is the sort of short-term type movement for gold if we've got traders favoring the upside. But at this moment of time, because we've got majority of candles together with the current prices as well, is favoring the downside only because it's actually under all these three EMA lines. The EMA lines that I use are the 50, the 100, and 200 exponential moving average. And we can see that quite clearly as we see candles trading under all these three lines. Three lines are also giving us a bit of a hint of a downward type preference because of the way it's flowing like a river to the downside, and it's separated from one another as well. So if we compare the 4-hour chart to the daily chart, we could see that the daily chart may not be as clear in terms of trend, mainly reflected by how the 3 EMA or exponential moving averages are moving. The way it moves, it's not giving us clear indication for the long term for the uptrend or downtrend to actually just persist. So we need to expect some correction, but at this moment of time, the preferred type move or direction is to the downside, especially from the 1-hour chart to the 4-hour chart. Okay, so I hope that is clear for you guys. Now, if at all we want to look at buying after it has actually fallen, you want to look to the left and through the daily to the 1-hour chart, sorry, we could see a probable area of support here. And the reason why I take this one here as opposed to here or here, it's mainly because if you want to buy, you want to buy in the market that's a little cheaper, and that has actually been driven quite high, or in terms of strength of the trend, to actually bounce up here stronger with a single mother candle as opposed to the other ones. Okay, so this is an area to look at. Probable support right here. You can see that it's not really far away as well from current price. Now, at this moment of time, it's 11 p.m. Cyprus time. So we are at GMT +3, if I'm not mistaken. And we are looking at the price of gold versus the dollar trading at 18.18. There may be a little bit of a preference to just hit this rate line right here and then bounce off upwards to that. And again, if it does actually bounce upwards, for that to be an upward move, it may not be an uptrend, but a correction instead, mirroring that bullish mother candle right there. So I would say that if at all it needs to go up and prefers to correct itself and go upwards and be bullish for a bit, it might actually mirror the length of that mother candle right there. But it is still short term, I would say, because as it moves downwards, we are not sure where the position of the three lines are. And usually if it bounces up, let's say it meets that red line right here, it might bounce upwards, but then find resistance at any one of these three EMA lines as well. So it is a bit of a catch-22 situation, whether or not to trade that sideways type movement, because that's basically what it's doing right now, is trading on the sideways at the moment, and there's no major participation in the market as well due to the holidays and various other reasons. But then I think tomorrow would probably be a better day to actually take a look at the market again, and especially after the London Open or during the London Open, to actually look at preference of traders, especially with the greenback, with the Chinese yuan, the GBP, various others that may actually have some sort of connection with regards to the movement of gold, okay, or correlation as we may call it. But it's a little bit tricky to actually use correlation, as it does actually change from time to time. Also, time frame. You might look at a correlation positively on a daily chart of one pair and the other pair, but then on the other time frames, it may not actually be giving you a very clear correlation, whether it's negative or positive correlation. Okay, so yeah, I just wanted to talk to you guys a little bit about gold, and would like to keep you guys a little bit aware of more resistance zones, as opposed to getting overly excited with some buying position, because your buying position may actually be tricking you a little bit. Market may be tricking you a little bit with a single candle going up, for example. Let's say on a 4-hour chart, 1-hour chart, may be a bit of a possibility of seeing maybe in another couple of hours time, or when the Asian Open starts, maybe some interest in buying a little bit of gold, and then you see that you've got a pickup of gold prices, and then you suddenly think it's an uptrend. It may just be a correction, so you want to be really careful. So I just want to keep you aware that yes, there may be some very, very short-term buying opportunity that may actually trick you into believing that it is a change of trend and then the market will go up. I doubt that that will actually happen for the next couple of days, maybe until next week. So maybe until the end of the week as well. We don't know that, but just to keep you aware that yes, if you want to buy, there may be a little bit of buying zone, but I say that again, little bit. That's not a significant sort of buying that can actually take place for gold at this moment of time, because we are looking at US picking up as well. So that picking up of the US during holiday the season, there's no participation in the market. I mean, there's lack of participation in the market for the US dollar because of the holidays and all that. But then news are revolving and still going on Bloomberg, on CNBC and all that. There's lots of positivity coming back. So maybe the traders, when they come into the market tomorrow, then they might actually just be putting all their pending orders onto the buy side, and that might actually just shock the market a little bit. But it's reflected now from now on with regards to gold's movement, and it's actually showing lots of probable indication that we've got resistance zones that is a little bit tough to beat as well, because they're quite significant, made up of a cluster of candles just concentrated at that one area right there, and then signaled by this very long wick to the upside here on this resistance zone. And then if you look at the big one here, you've got another wick right there. That is just showing you that there is exhaustion, quite strong exhaustion to the upside. So there's more participation of sellers as opposed to buyers. And then we can also see that by the movement of candles as well. I've got all these mother candles, bearish mother candles here as well. And you can see they're all quite significant. So that is what the market at this stage here might want to mirror, all this area right here. You see, so here, for example, it's on this candle here in the past, so there is a chance to come down to this area here. And if it does actually beat that area, come down to 1814 and then go lower than 1814, then there are higher chances of price to fall all the way down here and come to this area of support. So this is basically from me to you guys on gold, just giving you a little bit of an alert for gold not to be overexcited into the buying, even though you might actually see some buying taking place, and then just don't get excited with some bullish candle, because it may actually be temporary, mainly because it's got this area here that it can actually go into, but then as it progress a little bit more, please don't put more buying orders, because you have got that resistance zone there. So just exit and then look at entering the market for a buy if you're thinking of a buy only later, much later, until it goes above all this resistance zone here. So at this moment of time, it's more a bearish market as opposed to a bullish market. Okay, guys, I hope that's clear. I just want to alert you on gold's movement, because there is a probable chance of tricking you guys in the market tomorrow with some bullish candles upwards. But again, I want to alert you with all this resistance zone right here. Okay, once again, thank you, and see you guys again tomorrow. If I've got any more alerts on specific pairs as well or trade ideas, I'll be having videos released. Thank you very much. Take care, guys. Bye-bye.